Over the past year, inflation has been higher than the Federal Reserve has been willing to admit. It has risen faster than anticipated. At the same time, most of the other data the Fed tracks shows price increases that are much slower than the rate of growth in the money supply. These developments point to inflation that is accelerating and seems likely to get worse, but the central bank has been reluctant to acknowledge them. It has reiterated its pledge to keep inflation in check as long as unemployment remains low, offering few clues to its intentions about when it might begin to raise interest rates. Inflation, a numerical measure of how prices of goods and services rise over time. Median inflation in the U.S. has risen to 3.25% over the past year, with the national annual inflation rate as of September 2 registering 2.20%. The United States is suffering through an inflation problem right now. In the last year, the Consumer Price Index has increased 3.6% after rising 2.5% in the prior 12 months. This increase is due to three main factors: the higher price of oil, the higher cost of food. As food prices rise, so do the prices of everything else, and the higher tax rate that goes to pay for the costs of the tax cuts of the Bush tax cuts. Today, the U.S. economy is in a good place and inflation is still low. This means the Federal Reserve can continue to buy bonds and keep interest rates low. The Federal Reserve, the nation's central bank, has been buying bonds to keep interest rates low. The Federal Reserve is the only entity in the United States that can print money and use that money to buy bonds. This causes interest rates to go down and stimulates the economy. The Federal Reserve has been buying bonds since the end of 2008, when they were at the height of their crisis-fighting efforts. The Federal Reserve has been buying bonds to keep interest low. Over the past year, the Federal Reserve has bought $2 trillion worth of bonds, keeping interest rates low and supporting the economy. Over the coming months, the Federal Reserve will continue to buy bonds, keeping interest rates low and supporting the economy. The Federal Reserve, meanwhile, has been buying bonds in an effort to keep interest rates low and stimulate the economy. The Fed has purchased almost $2 trillion worth of bonds since the beginning of 2017. This has helped lower interest rates and make financing easier for companies and consumers. The Fed has also reduced its monthly purchases of bonds and has indicated it will begin to raise interest rates later this year. On the other hand, is buying bonds. This is a way the central bank can influence the economy by keeping interest rates low. The goal of the Fed is to keep the economy from overheating, which would cause inflation to rise. The central bank has used a variety of methods to accomplish this goal, including buying large amounts of government bonds and keeping the interest rates it pays on those bonds low. In contrast, has been buying bonds in order to keep interest rates low and to keep the economy strong. Over the past year, the Federal Reserve has purchased nearly $2 trillion worth of bonds, reducing interest rates and making financing easier for companies and consumers. The Federal Reserve has also reduced its monthly purchases of bonds and has indicated it will begin to raise interest rates later this year. On the other hand, has been buying bonds in an effort to keep interest rates low and stimulate the economy. Over the past year, the Federal Reserve has purchased almost $2 trillion worth of bonds, keeping interest rates low and supporting the economy. Over the coming months, the Federal Reserve will continue to buy bonds, keeping interest rates low and supporting the economy. The United States economy is in a good place right now. The economy is growing, unemployment is low, and job growth has been steady. This has led to steady consumer spending and a healthy economy. The economy is also less reliant on consumer spending, which is a positive for the future as the American population ages and needs to be better prepared for retirement. The economy has been growing for over 4 years, which has caused the economy to overheat, causing inflation to rise. However, the economy is now near its full potential and the Federal Reserve can continue to keep interest rates low by buying bonds. This has helped stimulate the economy, keep interest rates low, and support the economy. The Federal Reserve will continue to buy bonds in an effort to keep interest rates low. The Federal Reserve has also reduced its monthly purchases of bonds and has indicated it will begin to raise interest rates later this year. The White House on Monday moved to act on inflation, but stopped short of saying the U.S. will do anything about gasoline prices. The White House said on Monday it was moving to act on inflation after the run-up in prices. The committee will use its full authority to enact monetary policy as deemed necessary, the White House statement said. The Federal Reserve Board will now refer all inflation questions, not just to the Federal Reserve, but to the U.S. Department of Labor twice a year for an update on how the economy is doing. This is a change from the previous process, which required just one report to the Fed. On Wednesday, the White House said the administration was moving to act on inflation, after the inflation rate crossed the central bank's 2% target for the first time in a year. The Trump administration on Monday moved to act on inflation, announcing actions that would expand the supply of dollars in circulation by broadening the base of the U.S. currency at a time when a strengthening dollar is hurting American exports, sapping the strength of the economy. The inflationary spiral is a phrase used to describe the state of hyperinflation that many economies have experienced in recent years. Inflation, the increase in the prices of goods and services, is often the first sign that an economy is beginning to falter. When inflation begins to spiral out of control, it becomes virtually impossible for workers to earn a decent living. The only way to recover from inflation, then, is to bring it under control. The cost of living has risen sharply over the past year, with prices rising 2.5 times faster than wages. This has made it difficult for many to afford basic necessities, and has caused unemployment to remain high even as the economy has recovered. How can we recover from inflation? Background. Inflation is the increase in the general price level of goods and services. The world economy is in the midst of an inflationary spiral, which will continue to cause significant damage to the economy and the global economy for months to come. The primary cause of inflation is the surge in the price of oil, which has increased the cost of producing goods and services. However, there are other factors that have contributed to the current inflationary environment, including the increase in the price of labor, the trade war, and the raising of interest rates. All of these have caused the price of goods and services to increase, which has caused the inflation we are experiencing today.